Yeah. So, um, you know, the with the widespread adoption of solar, there are become so many more ways now to go solar. And actually, one of the most common ones, and becoming one of the more common ones as well, is in this business side, is financing.
Okay.
And there's also something called PPA. There's leases. There's a couple of different types of models, but essentially, it's all financing. The money's coming from somebody else to make sure that you can get a solar system, and then you can use that. And you know, essentially, is financing a good deal? I think it kind of depends. It's up to you. Like, hey, are you paying less
Yeah.
than what you're paying before? If you're paying more, is it for a short period of time and then, it's paid off? Like, those are things that you have to kind of analyze yourself. But
Right.
essentially, what is not usually disclosed is that the fees for financing, because you'll see very low interest rates, on
Right.
the business side, we can usually get down to like a 4.99%
Yeah.
interest rate, which we know right now that the Fed is giving interest rates out at like 7%.
Yeah.
So, well, how do you give a interest rate that's lower than that? Well, there's going to be fees in there. They got to make their money one way or another. They're not going to give you a loan that they lose money on, right? The bank isn't. So what they do is they charge you fees for it. And those fees sometimes can be 20, 30. I've even seen fees with 40% in there, which is just
My
crazy.
goodness.
So if you want to talk about, 40% of the whole amount of that loan just go in upfront goes to the bank to just give you the loan, which is insane.
And then you still have to pay interest afterwards.
And then you're still exactly right.
So your system, okay, but there are situations, okay, 40%, that's insane in a fee.
Yeah,
Um,
and they're not, listen, that's less common. On the
right,
business side of things, we'll see them go up to about 20%. But
right.
one of the things we do in our business is we disclose all of that, right?
Okay.
So like, hey,
Mhm.
listen, the financing fee is like a point, maybe 2 points, right? Sometimes I've seen it even up to 3 points depending on the lender.
Right.
And then we so but let's listen, like just like any traditional loan, if you want to buy down your interest rate, you can. It's just going to cost you points that go into the principal of the loan. So having that disclosed conversation, having it up front lets the customer know that like, hey, like, okay, I know what I'm getting into.
Right.
And what's funny is so many times people see the payment on the low percentage one and they go, that's what I want to do. And then once you kind of take them through all the things, they're like, actually, I rather pay a little bit more in my payment and have a higher interest rate. And I'm just going to pay this off in 2 years. And so like their priorities shift when they understand it. So it's always so much more important to disclose that. Sure, because you're going to end up having a happier customer in the long run anyways.